How do you easily get money for a startup or an existing business when you just typically can't qualify for other kind of financing? Well, there's this great little known about program out there that happens to be one of the best funding programs I've ever found called Credit Line Hybrid. In today's training, we're going to dive into Credit Line Hybrid. We're going to talk about what it is, how to get it. We're going to talk about how you're able to get this even if you don't have any kind of collateral. We're going to talk about how you can get it as a startup, a new business, a high risk business. We'll talk about how you can do this even if you don't have any cash flow or you don't have tax returns that show revenue or profit, or your bank statements are a mess. We're going to talk about how to use Credit Line Hybrid to be able to get the lowest interest rate intro financing I've ever found. And we'll talk about how to get multiple six figures in financing using this program. We got a lot to cover today, so let's dive in and talk a little bit more. So business financing, right? Every business needs money. Okay, but again, there's sometimes a lot of problems with being able to get money for businesses, especially new business. There's a lot of obstacles that may disqualify you for being able to get approved. So when we talk about Credit Line Hybrid, what is this? Well, it's basically an accumulation of credit lines or credit cards into one funding program. So it's where we kind of take the best of credit cards, being that we can get 0% rates, and the best of credit lines that we could take cash out. And we combine these benefits to one powerful funding program where you could physically get the money you need, hundreds of thousands of dollars, and take the money out and do so at 0%. So a great way to be able to get financing. And even if you can't qualify for this, half of the people that we see get approved aren't using their credit. They're not even personally qualifying. They're using the equivalent of a guarantor to qualify. We're going to talk about all of that today. Okay, so how can this help you fund your business where you're not risking at all? Well, what's nice about Credit Line Hybrid is that this is an unsecured type of financing. It's not secured financing. So when we talk about secured versus unsecured, there's two kinds of debt financing you can get. Remember, we talk about debt financing. We talk about credit cards, talk about credit lines, talk about loans. We're talking about where you borrow money from an individual, a private institute, or a private individual, or a private investor, or an actual financial institution. And again, secured versus unsecured. When we look at this kind of debt financing, you're borrowing money from an individual, private investor, or an actual financial institution. But the difference between secure and unsecured is secured, you're securing with something. So you're giving the lender, the credit issuer, some kind of collateral or asset they can take if you ever default. And that gives them peace of mind and makes it easier for you to get approved. Okay. But unsecured financing, you don't have that. You're not pledging any kind of asset as collateral. You're not giving the lender or the credit issuer that kind of security where if something goes wrong, they can come and grab that asset. Now, the trade-off here is usually with secured financing, the interest rates are really low. Meaning if you're giving them some kind of asset or pledging some kind of asset as collateral, you can get really low interest. But what's nice about Credit Line Hybrid is you can still do exactly the same thing, but it's unsecured. So what unsecured means it's not backed by collateral. You don't have to pledge an asset. If you default on this for any reason, they can't come and take your personal assets that you pledged. And a simple comparison here is secured financing can be equipment financing or inventory financing or 401k or stocks, where you're pledging 401k or stocks or equipment or inventory as collateral. So if you ever default, that stuff could be taken. With unsecured financing, nothing is being pledged as collateral. So you're able to get approved without actually losing or putting all those assets on the line. So Lupe says, awesome info every time. Thanks for coming in from Facebook. I appreciate it. If you're getting value, hit the like and love button and tell me where you're all from. I'd love to say hello to you all. Tashina, good morning. Thanks for coming in. Hello, Cypher, coming in from Atlanta. Thanks for coming back. Will Parks, good morning. I appreciate you joining us. Brilliant Davis with Unbound Business Solutions, LLC out of Tucson, Arizona. Brilliant's always with us. Thanks for coming in. Daniela, hello. Hello, just joined your program. Congratulations, virtual high five. Thanks for joining our family. I'm really looking forward to working with you, whether it be as a partner or whether you're actually coming in to be able to get credit and financing for your business. Williamsburg, Virginia, Toshina, thanks for saying hello. And somebody's coming in from Peoria, Illinois, as well as good morning from New Jersey, Robert. Hello, Corpus Christi, Texas. I love that, Lupe. Thanks for coming in. Texas is my favorite state. I oftentimes say that. So again, What's nice about unsecured is that you're not pledging assets. If you default, they're not going to come take your 401k, your stocks, your equipment, your inventory to be able to get paid back. Now, the only real downside of this is there's not really a downside, but if you want to look at it this way, just because it's unsecured doesn't mean you're not liable. You are liable. If you ever default on it, they're going to come after you personally for that if you personally guarantee the debt. So if you personally guarantee it, they're still going to come after you personally, but you're not pledging any asset or collateral they can directly come after. Now, that's the same with secure and unsecured financing. Even secured financing, if what you use to secure the debt, collateral, inventory, 401k, or stocks isn't enough to cover what you defaulted on, they're still going to come after you personally for any other asset or liquid money that you may have. So just the things to keep in mind is even though you're not pledging collateral, if you are providing a personal guarantee, you are giving them the ability to pursue you personally if you ever default. So again, credit line hybrid, happy medium here because you're not getting a secured loan. You're not getting secured financing. It is unsecured financing. But the other thing to keep in mind is that you can be pursued because you are personally guaranteeing this if you ever default. Now, other nice things, this is a happy medium. It's no doc financing. You don't have to supply bank statements. You don't have to supply tax returns. So what's nice about that is that it's not just supplying. It's not just the work involved with supplying this documentation. The one thing to always keep in mind is when a lender or credit issuer asks you for things, there's a reason they're asking for them. Those things are going to be used to scrutinize you to determine if you should be approved, how much money you should get, and the rates and terms you should pay. So when somebody asks for bank statements, it's not like, oh, the bad part is the cumbersome work of getting together the bank statements. The bad part is they're going to scrutinize those bank statements to see how many deposits do you have going in a month? How much are your withdrawals versus your actual deposits? Do you have a positive ending bank balance? Do you have non-sufficient funds? They're looking at all these factors of how you're managing the cash flow to determine if you should be approved or not. So anytime you can get approved for something like this, where it's no doc, where you don't have to supply the bank statements, well, then that's less scrutiny you're going to face, which makes the approval easier. When you don't have to supply tax returns and they're not looking at them for your NEICS, your industry code, and what expenses you're writing off and what kind of profits you're claiming, and is your revenue increasing year after year? They're looking at all these things. With no doc financing, none of that stuff is being scrutinized. So that means a lot of the stuff that can typically get you denied in normal financing is not happening here. So this is unsecured financing. You don't need to pledge collateral. It's no doc. You don't need to supply bank statements and business licenses and tax returns and a lot of the other stuff that you have to supply for other kind of financing. So it's less risk to you and it's easier to get approved because less things are scrutinized. Now, beyond that, the nice thing is that you're getting 0% rates here for up to 18 months. So when you're starting a business, you always want to keep your payments as low as you possibly can. It's why a lot of people look at angel investment, because even though you're giving up stock or ownership interest in your business for angel investment, you're not taking on debt that has to be paid back. So you don't have these payments that you have to make while you're launching the business. What's nice about credit line hybrid is you get 0% for oftentimes upwards of 18 months. So this keeps payments very, very, very low, especially in a time you really need it. So a lot of time you're borrowing the money, you're borrowing it to deploy a strategy to either get a business off the ground or grow an existing business, which means you're deploying the money to test a concept, to execute something that's probably going to make you money. But there's a lag time. So in my world, it's about 4 months, which means if I spend a dime on Facebook, it's going to really take me about 4 months before that equates to sales. So I've got this lag time that I need to keep my payments low during that lag time because I deployed the money to make me money, but I'm not going to make the money for months, but I still have to pay money for the debt that I took on to deploy. So 0% helps you with that lag time. It helps keeps payments low while you're actually deploying the money and waiting for the return, whether it be on starting a business or grow an existing business. Now, another benefit of credit line hybrid is there's multiple credit cards and lines being stacked together. And what's nice about that is that you're really creating competition. The way the banking industry works that bankers don't want you to know is that they're very competitive to be able to get your business and to be in that first position. So you, like I, probably carry multiple credit cards with you. And more than likely, you use the highest limit card that you have. Most of us do. If we look at spending patterns of business owners and on the personal side, we typically see that the card with the highest limit is what we typically keep with us and use. Even if it's not our primary card, it's still a card that we typically keep with us. And I always make a joke that, hey, you never know when you're going to need the ability to buy a car, right? So you should always have the highest limit card. Now, of course, all of us don't have 20, 30, 40, $50,000 limit accounts, but it's just a kind of an example of what we typically do. So banks want to compete to be your highest limit account. I'll give you an example. I once got approved for a Bank of America credit line, and I told them, I said, I'm not interested. I'm going to turn it down. They said, why? I said, because I already have a Wells Fargo credit line that's way higher than what you're giving me here. So I would rather just use that and just not even have this to deal with. And they said, well, how high do you want the approval to be? And I told them, and they actually gave me that approval, which was higher than Wells Fargo. They want to be the highest limit account that I have access to because they know I shift and use that primarily, even though there's rewards points, there's all these other benefits. It's just psychologically, we tend to default to our highest limit account. Okay. It's why when you get a credit card, that credit card approval rates are very similar to what your other card limits are, but sometimes a little higher. So sometimes you have a $5,000 high credit limit, and then the next card you get $5,500 or $6,000. It's a little higher than the rest of the limits you have because they want you to use that as the primary card or line that you're actually using. So having multiple lines is really good to create competition because you're able to come in and say, hey, look, I already have an American Express card, and that American Express is thousands of dollars higher and oftentimes get them to bump the approval. And American Express is a perfect example. The last time I go every 6 months and ask my current card issuers to raise my limits as long as it does not not involve a hard inquiry. I do it all the time. So every 6 months, go to every credit card company I have, and I say, hey, I want to solicit you for an increase to my limit, but I don't want you to look into this if it results in a hard inquiry on my credit report. And the reason I do that is because I can go and get a $10,000 limit card bumped to $15,000 and get an extra $5,000. But if it costs me an inquiry to do that, I'd rather go get a brand new card and get a $15,000 limit. Instead of bumping me $5,000, I can get $15,000 of brand new usable credit. So I use my inquiries only for new credit, not to bump approvals on my existing credit. But a lot of my credit card issuers will do an analysis and bump me up just because I solicit them every 6 months to do so with no hard inquiry. So I do this every 6 months, and oftentimes it's shocking how much they'll raise your limits. As a matter of fact, when I get a new card, I immediately solicit them for a bump in the approval amount. And you'd be surprised at how effective this is. So I oftentimes with Amex will see a 50% increase, 50, just off what they gave me just because I asked. They give me a $10,000 limit. I say, hey, that's not enough. Will you reevaluate this and give me 15? You'd be blown away. Like 9 out of 10 times I do that, they give me the 15. They give me a 50% bump up their initial approval just because I asked. So I'm telling you this because creating multiple credit cards and credit lines is one of the most effective ways you can increase your overall credit utilization. Because when I call Amex and say, hey, Discover's my highest limit card, that's what I'm going to use. I'd like to make you my highest limit card. In order to do that, you'd have to approve me for this much. You'd be shocked at how many times they will approve you. So getting multiple credit lines and credit cards through Credit Line Hybrid automatically creates competition and makes it easier right away for them to give you approvals and then even bump those approvals because they want to be in that highest position that they can be in. Okay, so good morning, Burdell. Thanks for coming in. I appreciate you saying hello. And somebody's coming in here. Credit Avenger from New Haven, Connecticut. Thanks for coming in. Deborah says currently in Baton Rouge, Louisiana. I love Baton Rouge. Some gambling there, although I'm not really much of a gambler. But you have to PG. There's 2 options you can get. And we're going to talk about PG in just a minute with this because the answer that's yes and no, this helps you with both personal guarantee and not personal guarantee as well. And Deepak says, I'm Deepak from India. Thanks for coming in. I need a loan. Could you help me? We can if you have a business in the United States. Get in touch with us. We'll give you our contact info. It's on the bottom of our slides as well. Hello from Colorado Springs. Nick, thanks for, and if whoever it is from Facebook that's sharing people in there, I appreciate you coming in and being able to share this with people. If you're getting value, please hit the like button, hit the subscribe button, hit the share button. If you haven't said hello, tell me where you're from. I like to say hi. Okay, so remember, 0% interest can be used to pay off higher debt accounts. You can use these to pay off higher debt accounts and even personal cards as you're rolling over your spending to business cards. A lot of us use personal cards to deploy the business to get it started. Then you can come and get Credit Line Hybrid, move those debts over here at 0%, lowers your payments and starts separating your personal and your business debts and liability, okay? So very good to be able to bridge the gap and getting other kind of financing and being able to get money for an emergency as well, being able to buy inventory, a lot of things you could do. What's nice about Credit Line Hybrid is that it's revolving credit. So it never hurts you to get it and have it because you only make payments on what you use. It's not like a loan where the minute you get it, you have to start making payments and you got to deploy that money. With this, you can come in, you can get equipment, you can get repairs, you can do all these things with Credit Line Hybrid. And the nice thing is that you're only making payments on what you borrow. So if you're not using it, you're not making payments for whatever it may be. Now, back to equipment, a perfect example of how to use this is that we help clients get equipment financing. They need the first and last month's payment down as down payment. They'll use Credit Line Hybrid to cover their down payment. So Credit Line Hybrid works really well at covering the down payment when you're buying equipment or helping you get the money you need to cover part of what you need to pay up somebody if you're buying their business and they want a certain amount of money up front. This is very good for that as well. So there's a lot of different benefits along that line that can help you. Now, let's talk about this as well, because this was just asked about, is there a personal guarantee? Well, it's a good and bad thing here. So personal guarantees are not required when your business has enough credit to stand on its own. So that's what it comes down to. If you've built your business credit profile and score, and it's got 14 accounts on there, well, then you can start getting Visa cards, MasterCards, or what we call bank credit without a personal guarantee. But personal guarantees are 100% based on the building and quality of your business credit. That's what it's based on. So when somebody says, is there a personal guarantee? The question is, well, is your business credit established? If your business credit's really well established, then we can start talking about the Visa cards, MasterCards that you can get without a personal guarantee. Now, with Credit Line Hybrid, you are providing a personal guarantee. But the nice thing is that a lot of these cards and lines report to the business credit reporting agencies. So what's happening is you're saying, hey, look, my business credit's not established enough to get no personal guarantee, Visa, MasterCard type of bank credit. So I'm going to use Credit Line Hybrid, get $100,000, $150,000, whatever it is that you're able to get approved for. And on top of that, a lot of these report to the business credit reporting agencies. So you're helping build your business credit at the same time that you're actually getting access to these high limit credit lines. So now you're building business credit, which will help you get away from personal guarantees and get even more money without personal guarantees. But in this, initially, you're using personal guarantees. So the nice thing about this is a lot of people will use Credit Line Hybrid to jumpstart their business credit building. Instead of using vendor accounts like Uline or Quill or Granger to actually get small limit vendor accounts on your business credit reports, they'll get Credit Line Hybrid to get $10,000, $20,000, $30,000 limit credit cards, credit lines. Those report on your business credit reports. Then all of a sudden you have these high limit lines to start your business credit profile. And that's going to make it easier for all your future approvals to be higher limits as well. Remember, we talked about that. Credit issuers like to mimic the limits of what you've already been given because that's how they know you're more inclined to use their lines. Well, when you come in and start your business credit profile with $10,000, $20,000, $30,000 credit lines, then what's going to happen is as you start to continue to build your business credit, get retail credit, get auto financing, get fleet credit, those limits will be substantially higher right away because you started building your business credit with these high limit accounts. And it gets you to a point where you could build business credit with Dun & Bradstreet, Experian, Equifax, and then be able to get this credit without personal guarantee. So let's talk about how much you can get approved for. Let's talk about qualifications. Well, this is easier than you think to qualify for. You don't need collateral. We talked about that. It's unsecured. So you don't need stocks, bonds, 401ks, IRAs, equipment, inventory, real estate, your personal home, all those assets that are used as collateral, you don't need here. You also don't need revenue. Remember, it's no doc. There's no bank statements. There's no tax returns. Startup businesses can get it. High-risk businesses can get it. You can start a business tomorrow and get it. The one thing and only thing you need is you or somebody else that's a guarantor to have good personal credit. So you need to have at least a 680 FICO score. You can get approved for some personal reported cards, with less than that. But to get the business reported cards, you really want to have a 680, 700 type credit profile and score. It's not credit score based, it's credit based. But if you have a 680, 700 type credit score, that reflects the kind of credit profile they're looking for. Now, here's the great news. It doesn't have to be yours. 50% of the people we help with this program are not using their credit. They're using somebody else's credit. They're using dad, mom, grandpa, grandma, friend, brother, sister, potential investor, somebody else's credit to qualify. So let me give you an example here. Let's say, I'll give you two examples. Let's say I go to my dad and I say, Dad, I need $25,000 to get my business off the ground. Will you help me? My dad would help me because he knows that I am going to pay him back. I would always pay him back if I were to borrow money. So what my dad would do is he would sell stocks to get me the 25 grand. He's smart, financial savvy. He's not going to leave 25 grand just sitting in his bank account, not earning interest. He's got it deployed out there earning him money, right? So he would liquidate stocks, pay tax penalties, and then not have that money making money for him on the stock market to give me my 25 grand. Now, in lieu of that, I could go to dad and say, Dad, look, I need 25 grand to get my business off the ground. Here's the great news. I don't want you to give me cash. I don't need you to sell stocks. I just need to use your good credit to qualify for this program called Credit Line Hybrid. Get my $25,000 of credit lines. Okay. You keep all your money where it is. I get access to what I need to grow the business, and I'll pay you back whenever based on these terms. I can pay you back that money. And the only way you lose, Dad, is if I default on the credit. Because a lot of the credit reports are my business credit reports, so it doesn't even show on your personal credit reports. And the only way you would be harmed would be if I default on it, if I don't pay you back. And then, of course, they would come after you personally because you're a guarantor in it. Well, if my dad gives me 25 grand and I don't pay him back that 25 grand, he already lost that money anyways. So he's going to lose out either way if I default. But what's nice about this program is he doesn't have to liquidate that money, pay tax penalties, not earn interest on it. He could just use his credit to qualify. Now, that's one example. Another example is, let's say I have a potential investor. Let's say I go to a friend of mine and I say, hey, I got this great idea. Here it is. I, as you know, friend, rent all my vehicles on Turo, and I've made an entire business buying exotic cars and having all this stuff and then renting it, and it all makes me money. And I want to create a course, and I want to teach people to do this. I'm going to create a course, and I'm going to sell it and teach people how to do this. And I need some help financially to be able to get this thing launched. Would you be interested? Here's the great news. I don't need money from you. I want to have you come in as a guarantor, get this program called Credit Line Hybrid. The accounts will report on my business credit report, so it helps my business become more fundable. And then in doing so, you only lose if I default. And in doing so, I'm going to give you 5% ownership interest in the business, 10% ownership in the business, or 8 or 10% interest return on the money you're giving me. I'm going to give them something in exchange for that. So now it makes it easier for me to get the cash I need, but instead of people giving me money, 75% of business owners start businesses with money from family and friends. I don't need to now. I can rely on their credit, and they don't have to exchange any money, and they can still get ownership interest in my business, or can still get a rate of return, or they can still help me if they're a family member without actually deploying their cash to be able to do so. So some ideas and suggestions here of how this can actually be used. Hello, Henderson, Nevada. I have a lot of land. I have a land business, and I own a lot of land out in Elko, Nevada. Just so you know. Yes, I made it. Keytex, thanks for coming in. Evander from Miami. What's up? Got a lot of friends down there. Keytex says smash the punch, the slam on the like button. I appreciate that. So again, if you're getting value, hit that like button, hit that love button. It's the only thing I ask. And not a lot of you are doing that. So I don't know if I'm doing a bad job here or not, but that's what helps the social channels attract more people in here to help more people. Fort Worth, Texas in the house. Louisville, Kentucky is in the house. I'm seeking to get 150 grand. You can get 150,000 or even more with this program. And you can get this, Devontae, as a brand new startup business. As a matter of fact, of all the funding that I work with and teach about, this is the absolute best, hands down, for startup businesses. I love it more than anything else because, again, it's 0% rates. It's no doc. It's real easy to get approved for. Now, you need to have good personal credit across all three bureaus because that's what's going to get you the most amount of money. They're not going to want liens, judgments, bankruptcies, late payments to be on your credit report as well. They're going to want less than 6 inquiries in the last 6 months. If you have more than that or 6, it just limits the amount of funding you can get. The less inquiries you have, the more money you're going to get. And here's a very important tip to help you get money for your business, not just through this program, but overall. lenders really look at inquiries more than you'll ever know. The biggest trend happening right now today, okay, here in September of 2021, is that PayPal, one of the easiest loans to get, is denying people with the reasoning being that they have too many commercial inquiries on their personal credit report. So we're even seeing PayPal loans, which are the easiest loans to get, actually being denied because people are using their personal credit to go out and get commercial loans. And they see this, there's too many inquiries and they're denying people. With Credit Line Hybrid, the difference between 2 inquiries on your credit report and 6 inquiries could be the difference between 50 to 100,000 in funding. So I'm telling you this because you have to limit the amount of inquiries you have as a business owner. Inquiries are like gold in my world, meaning that in my world, the funding world of small business owners, inquiries are gold. You protect those like there's no tomorrow. You should never use your personal credit and let anybody do an inquiry unless it's absolutely essential. And if you see any inquiries on your credit you don't recognize, you should dispute and get those removed, because inquiries are like gold in my world. The fewer you have, the more funding you're going to get. It's exactly why you need to build business credit, because when you build your business credit, you can use your business credit profile to qualify you for every kind of credit card. You can get credit cards in every retail store: Sam's Club, Best Buy, Staples, Office Depot, Amazon, Walmart. You can use it for fleet credit to get fuel at Shell, BP, Flying Pilot, Flying J. You can use it for auto financing. You can use it for Visa card, MasterCard, bank credit. You don't need to use inquiries for any of that stuff. If you follow my training on building business credit, you can get all of that credit with no inquiries. So what we're doing here is getting you money to fund your business without any impact on your personal credit. Then you can save those inquiries to use for credit lines and loans. Like if I'm going to use, like I just used an inquiry for business funding. It's for a $250,000 credit line. Okay, I know you're going to need my personal credit. I'll let you use my inquiry for that. I save my inquiries for that kind of money. I don't use it for credit cards because credit cards are too easy to get by building business credit. So you always want to minimize inquiries to get max funding. Okay, you also want to keep your utilization lower. The higher your utilization, difference between your balances, okay, and your limit, the more money you're going to typically get. So you really want to come in and lower the amount of balances that you have. Now, a way to improve your utilization is to just ask your card companies for an increase to your limit, but don't let them do an inquiry on there. The other thing is there's this bridge funding that's available with this program, where if you have utilization and you have balances on your credit cards of 30, 40, 50, 60%, well, then you can get a bridge loan and a loan to pay down the credit cards, get higher approvals with Credit Line Hybrid, and as a result of that, use the money you get from Credit Line Hybrid to pay back the bridge loan you used to pay down those credit cards. So to repeat that process, you come in, you say, I want this, but my balances on my existing credit cards are too high. The funding source says, no problem. Here's a loan. Pay down the credit cards. You pay down or pay off the credit cards. Now you get approved for $100,000 with Credit Line Hybrid. You take part of the $100,000, you pay back the bridge loan you used to pay down the balances on the credit cards, and it helps you get even more money. So the funding sources do have access to these bridge loans that will actually help you qualify for even more money as well. Now, remember, you can use a credit partner or what's called a guarantor. So if your credit's not good, well, then use a guarantor to help you. It's okay, because since a lot of these accounts report on the business credit reports, then the only way they lose is if you actually default on that money. So it's a great way to go. Okay, now Tucker says, good morning from New York. Thanks for coming in. And K-Tech says, so best to try and remove inquiries first. Well, first of all, I would check with the funding source. What's nice about Credit Line Hybrid is you can give us a call. You can go to creditsuite.com/get funding or give us a call. Our number's on the bottom of these slides. We will get you to a funding source, and same day, they're going to give you a pre-approval. No inquiries on your credit report. They're just going to say, boom, here you go. Here's how many or here's how much you can get approved for. By the way, if you remove inquiries, you can get this much. They even have inquiry removal companies they work with. So that's not something you need to do. If you want to come in and get pre-approved, the funding source will even help you come in and remove inquiries. Now, one other thing that just popped in my head is when it comes to business credit building, we've got funding sources in this area that just because you get approved for the credit lines, that alone adds a trade line to your credit report. So I'm not talking about the lines themselves. I'm talking about the fact that you got approved for the lines is an actual account on your business credit report. Then you have the lines that report. We did that. We went to the funding sources and said, hey, why don't you help our clients get approved and then report the fact that you did that on their credit reports? Now they have the credit lines they get to help them build business credit, and just the fact that they got approved with you as a trade line as well. So something else I wanted to add when it comes to building business credit and how this could be easier. So again, as we talked about, 0% rates helps you build business credit. No doc financing as well. And you're able to get upwards of 150,000 or even more based on your current existing limits and your utilization, quality of your credit, increase. Everything I talked about today really accounts for how much money you can get, but it's very common to be able to get 5 or 8 times the amount of whatever the highest credit limit account you have now is on your credit report. So if you have a $10,000 limit, you can oftentimes get 50 or 80,000 in funding using this kind of funding program. So to recap, 0% rates for 6 to 18 months. You could take all the cash out at 0%. That's insane. So I can get 150 grand in financing, take my cash out at 0%, and then use that for things I may only be able to use cash for. So for example, a lot of fix and flip real estate investors use this program. They get approved for credit line hybrid. They take the cash out. They buy their first 1, 2, or 3 properties. Then they build business credit and use business credit to get Home Depot, Lowe's, all the revolving credit cards they need to fix the properties. And then they basically come in, they sell the properties, they start making money, and then they typically get fix and flip proper funding after that. So that's a whole strategy to completely start from scratch and become a real estate investor. You get credit line hybrid, you buy your properties, you're building your business credit, you get the Lowe's and Home Depot credit card to fix up the properties, you sell the properties. Now you have some cash. Now you have a history. Now it's easier to get what's called house reseller or flipper financing to be able to finance the rest of your fix and flips. That's just one industry, one example of how this can be used. So take the cash out, get 0% rates, get hundreds of thousands of dollars in funding, no doc. Works for startup businesses, works for brand new businesses, works for high-risk businesses, unsecured, no collateral needed, no doc, no cash flow needed, no bank statements, no tax returns, easy approval process, pre-approved same day, fund typically in 2 to 3 weeks. It gets 2 to 3 weeks to get your actual credit cards and credit lines. So ton of benefits, as well as it helps build your business credit. So pretty strong benefits. And now you know why it's one of my favorite programs that you could even think about to be able to start a business or to be able to grow an existing business. So next time we meet, we're going to talk about working with advanced business vendors. We're going to talk about good business credit doesn't stop with vendor credit, how to continue to get more credit as you continue to build your business credit profile and scores. And we're going to talk about how you can get away from personal guarantees. All of that is what we're going to talk about in the future. If you want to talk about credit line hybrid or any other funding program, give us a call. We don't charge you any money to get funding. It's 100% free to have my team help you through this process. So all you have to do is give us a call. We can get you pre-approved for credit line hybrid amongst many other kind of funding programs. You can also go to creditsuite.com/get funding. On a consultation call, 3 things happen. This is the only time you're going to get anything like this for free. On the consultation call, we do a fundability check. We look at the stuff that typically gets you turned down with lenders and credit issuers. We help you fix it to become more fundable to get more money. Second thing, we get your business credit reports for free. If you go to the business credit reporting agency's websites, it's $250 a month to get your credit reports. We get them for you at no cost. It saves you $250. Then we give you tips and tactics to improve and start and build your actual business credit. And the third thing we do on the free consultation calls, we do a funding qualification, a funding assessment. We tell you all the funding you can qualify for now, credit line hybrid, amongst many, many, many others. We work with every legitimate kind of funding program in the business space. We tell you all the funding you can get approved for now. And all that happens for free. All you have to do is give us a call at 877-600-2487. Email us info@creditsuite.com, or you can even go to creditsuite.com/consult to be able to actually schedule. So some other tips there that will help you be able to get max funding, especially on that consultation call, which will really, really, really help you to know what it takes to actually get approved. Okay, so got some questions here. K-Tech says, I have 7 inquiries, made a bad choice doing business with a fake realtor, paid more than 10K. Oh, I'm sorry to hear that. Well, again, if you want, give us a call. We can still look to see what we can get you pre-approved for. And the funding source will even recommend a company that can help you with those inquiries, especially the ones you don't recognize. Robin, you're asking which bureau. It depends. So what the funders will do is look at your credit, and they know which credit line or credit card will only report to Experian or only report to Equifax or only. So they can actually, I'm going to look at 3. So that's something we can walk through and talk to you more about as well. Okay, and Juan says, hello, just curious, would it be better for you to switch to Credit Line Hybrid versus the regular program? Credit Line Hybrid, give us a call. So you want to do both. You always want to build your business credit because the goal there is to get funding without the personal guarantee. Credit Line Hybrid is just a shortcut to build your business credit, and it's funding you can get on top of your established business credit. So the answer is you don't want to switch. You really want to do both. K-Tech says he put me through with Capwell because I told him about my credit scores above 730. Got approved for 4 cards, and then he requested I get him 1, been 5 months. Okay, so K-Tex, give us a call. Let us walk you through that. If that funding source doesn't work, then we might be able to get you another funding source. But again, what you're saying here isn't 100% clear, and I want to make sure that we get you the help that you need. I'm making minimum payments on each of the cards right now. So give us a call. Let us talk through that and figure that individual scenario out better for you. What does your credit score need to be? 680 or higher. Remember, you can use a guarantor. And Evander, I'm a real estate investor. This is very roll the fee into the actual funding they get. But oftentimes you're getting 0% rates, but you could pay with us like a 9.9% fee to the actual funding source. If you go to the funding source directly, charge like a 12% fee. So some things to keep in mind. We don't charge you any fees ever for any kind of funding. Okay, some lenders pay us a referral fee, some don't, but we never charge you a dime to get you funding, which is why it's nice to give us a call and let us help you through the process, because it's like you have very, very, very proficient experts that help you get maximum funding with all kinds of funding programs at no cost to you. And we do that because that's what we do. Our goal is to help you as an entrepreneur get money. And, hopefully you'll use part of that to get started with our business credit building program and get away from guarantees. But remember, we never charge you a dime of money to get financing. So if that helps you along the way, then give us a call. We can help you. 680 should be all of your scores. TransUnion, Equifax, Experian should all be 680 or higher, or use a guarantor that has that. William says, what if your limits are low, but your FICO scores are high? You could do that. Remember, typically you'll get 5 to 8 times the amount of your limits. So what I would do is I'd call my credit issuers, ask them to raise my limit, but don't authorize an inquiry. And then I would go in and apply, and just keep in mind, you're going to get 5 to 8 times the amount of your highest credit limit accounts. Then in a lot of cases, they'll go back 6 months later and do another round of approvals. So you can get some money now. Then as your approval or your limits are higher on the credit you're getting, that will help you get even higher limits 6 months down the road. And that process can be ongoing. Your personal credit won't work in the 500s, but if you have credit in the 500s, then you want to really think about guarantors around you. Family member, friends that will do it just to help you, or people that want to potentially invest in you and your business. Also keep in mind, Tucker Zone, we've got a lot of training on our YouTube channel, thousands, literally thousands of videos that teach you all kinds of funding for bad credit. So if you have credit issues, go to our YouTube channel, youtube.com/credit suite, type in bad credit, and you have all kinds of training from us on different options that will work for you if you have credit issues. This program, the one thing you need to get approved is good credit for you or a guarantor. So if you got value, hit the like button, hit the love button for me, and subscribe. That way you'll be notified when we go live. We go live Tuesday and Thursday at 1, 11 o'clock on Wednesday, all Eastern time. We go live on Facebook, my LinkedIn page, Ty Crandall's LinkedIn page, as well as YouTube. And if you go to the top right of our page, creditsuite.com, then you'll find all the links to our social channels. Thousands of videos on YouTube, daily tips on Instagram, on Twitter, on Facebook as well. New video content that's very short, less than a minute, and our Instagram stories on our actual TikTok channel as well. And you'll also find our podcast, the Business Credit Financing Show. Not only do I teach you business credit financing on our podcast, but I bring in experts to teach you everything about running a business. So the woman I just interviewed today is all about building a recession-proof business, why businesses thrive during COVID, which ones did, which ones didn't, and how to build your business from scratch, the model to do it where your business is recession-proof. So that's the kind of content we talk about on the podcast, over 500,000 downloads, so very popular. And access the podcast or all of our social links, go to the top right of our page, creditsuite.com, and that can help you. And Tucker says, no, you might not have a guarantor. It sounds like it's your response. That's okay. Go to youtube.com/credit suite, type in bad credit, and you'll be able to find tons of training on other financing options that may work for you if you have credit issues and don't have a guarantor. That might be a better fit for you than this one. And also keep in mind, Tucker, that building business credit works very well for you. If you've got personal credit issues, then build the business credit. By building the business credit, you give yourself a lendable, fundable asset to help you get even more money where personal credit's not as important because your business credit's established. You could fund your entire business using business credit. So go and get our training on building business credit. You can get on YouTube or go to creditsuite.com/EIN. If you go to creditsuite.com/EIN, you'll find our step-by-step business credit building guide, and that's a great way to get money regardless of personal credit as well. I look forward to seeing you on our next training, and we are talking tomorrow, Thursday at 1 o'clock Eastern, more about building business credit and getting away from personal guarantees. So make sure you tune in. I look forward to seeing you on our next training where we talk about getting more cool ways to get money to start and grow your business. Thanks for tuning in. Have a great day.